A job that pays $50K, $500K, and $50 million. How different are they really? Statistically, the vast majority of people watching this video are much closer to the $50K role. Less than 1% of Americans earn north of $500,000 at a job, and a fraction of a percent will ever earn $50 million per year working for a company. Today, we're going to compare the theoretical day in the life of these three jobs within the same company and cover the tasks associated so we can try to get as good of an understanding of what each job truly looks like based on facts and research, so you can decide if there really are jobs that are 1,000 times more valuable within the same company. Let's start with $50K. Angelo is 24 years old and just 1 year into his first full-time job. He works at a massive public software company on the West Coast, the kind with over 50,000 employees and more than $30 billion in annual revenue. Even though he's a small piece of the puzzle, he certainly takes pride in saying that he works in tech. He's a marketing coordinator, which means he's near the bottom of the marketing team hierarchy. He earns $50,000 per year, made up of a $48,000 salary and a small $2,000 bonus at the end of the year. He doesn't get granted stock or anything like that, but he can get a match up to a certain amount if he contributes to his company 401k. According to national data from Robert Half, this is fairly low to mid-tier comp for someone in Angelo's shoes. Entry-level, non-technical, corporate marketing in a somewhat high cost of living city. His job leans to the more administrative side than glamour. On a given day, Angelo is formatting PowerPoint decks, he's uploading creative assets, he's, taking meeting notes, sending out email templates, and updating marketing calendars. He's joining the team calls, but it's mostly just to tap in and listen. He doesn't really own any campaigns, doesn't present to leadership, but doesn't have any direct reports. He's there to basically make life easier for the more senior marketers who strategize and run the campaigns. Now, that absolutely does not mean that Angelo's job is pointless. In fact, it's quite important. Without somebody like Angelo, teams slow down very quickly. Some deadlines slip, and people spend time doing things like fixing fonts and formatting as opposed to working on launch strategy. He's not necessarily driving the business, but he's keeping the wheels from squeaking, and that honestly means a lot to a company like that. Angelo works a fairly predictable 9 to 5. He's not expected to stay late or check emails at night. His stress is kind of low, and while he does make solid contributions to his team, his impact company-wide it's not insanely big. If he messes something up, somebody can usually fix it quite quickly. He doesn't have any direct reports, doesn't have people that depend on him, and he's accountable to pretty much no one other than his direct manager and some of his coworkers. If Angelo left, it would probably take a few weeks to find his replacement, and in the meantime, the company would most likely just continue to chug along. Financially, things are most likely tight. After taxes, his take-home pay is around $3,200 per month. That barely covers rent and groceries, a used car, and the occasional night out. There's no real room for major savings unless he lives with roommates, works multiple jobs, and cuts back really hard. Compared to the average college grad salary of around $60K based on US Census data, Angelo is somewhat behind. Usually somebody in his role working at a tech firm would be making $65K plus or so, all in, at least based on previous years. But the company recently restructured, and given the job market is currently in a standstill, he's just happy to have a job at all because a lot of his friends can't find one anywhere. Now, with regards to his future prospects in his career, a lot of it depends on visibility. Marketing isn't similar to engineering, where there's a somewhat clean promotion schedule or structured technical ladder. If he stays passive, he could get stuck in the coordinator role for years. But if he networks internally, finds good managers, and jumps around companies strategically, he could probably double his pay in 3 to 5 years. Still, it's a steep climb, and it's absolutely a grind. There are thousands of Angelos, and honestly, there's not that many seats right now for people like him to move up. So is he replaceable? Technically, yes. Is his work high leverage? Technically, no. But he shows up, he removes friction, and he gives his team time to focus, and it is valuable. Every company needs people like Angelo to get things moving at a foundational level. Next is James. James is 41 years old. He works at the same massive software company as Angelo, but his world looks very different. He's the senior vice president of product marketing, one of the most critical and high-pressure roles in the organization. He earns around $500,000 a year, made up of a $300,000 base salary and $200,000 in company stock, or RSUs, that vest over time. On top of that, he's eligible for a $120,000 performance bonus, obviously based on performance, but even without it, his pay still places him near the top 1% of earners in the United States. Most people don't fully understand what James does, but to understand it simply, he makes sure the right customers understand, want, and buy the product by telling the right story about the product to the right people in the right way. They don't build product, they position it, they launch it, and they make sure that it sells. His job is to make sure the entire company tells the product story in a similar way. Sales teams, executives, analysts, the website, investor calls, all of it, it needs to align. His team creates the words, frameworks, and messaging that helps customers understand why the product matters and why it's worth buying. James doesn't create the PowerPoint decks as much anymore because he manages a 28-person team across multiple time zones. But nothing goes out the door at all without his approval. His influence spans over 200 people directly, and indirectly, he shapes how $5 billion worth of annual sales pipeline gets positioned, explained, and closed. If James messes up a product launch, the revenue might not just slow down, but it could drop. If messaging isn't sharp, the deals can stall. If analyst briefs go poorly, the stock can take a serious hit. A single botched launch of a product could cost the company tens of millions of dollars. That's how high the stakes are. His day starts around 7:30 a.m., often from bed, scrolling through Slack and emails from European teams. By 8:30, he's in his first meeting, and he usually doesn't stop till around 6 p.m. Most days, he has 10 to 12 meetings back-to-back with no space to actually do work. His calendar includes messaging reviews, launch syncs, sales calls, and a lot of corporate stuff, but honestly, it's a lot of alignment and directing. Then he has dinner. Maybe he puts the kids to bed, and then honestly, he probably logs back in. If a launch is going live in Asia or a VP needs a last-minute review before an earnings call, he's going to be working late that night. The stress is constant. James doesn't usually have too many deep work blocks where he can get some real creative work done. He operates in real time, constantly switching context and managing competing timelines and absorbing last-minute escalations. His inbox never hits zero, and his team never stops needing input. Basically, there's a lot of time-sensitive things that need his attention, and he kind of goes in, solves them, and then moves on to the next 20 problems. And yet, if he does everything right, it's not that noticeable, but if he does something wrong, everybody notices, and the calls can start to come from people like the CEO. He's not building features or automating revenue. His impact really comes from coordination and clarity, and his leverage comes from keeping hundreds of people aligned. That's the kind of work that is tough to outsource. After taxes, James can take home somewhere around $300 to $315K per year. His salary nets him around $170 to $185K, and his stock adds another $100 to $130K. When his bonus hits, he could net over $400,000. He lives in the Bay Area. He owns a home with a mortgage, he has 2 kids in private school, he maxes out his retirement accounts, and he works with a financial advisor. He's not rich by the way founders or venture capitalists maybe are, but he is safe, he's secure, and you definitely can consider him wealthy. James got here through 18 years of work. He didn't have a meteoric rise, he just kept showing up as a marketing associate, then a manager, then a director, and then eventually a VP. He built teams, he shipped successful products, and he built trust with people who matter. Then eventually, somebody with some influence said, put this guy in charge. From here, he could go become a chief marketing officer at a smaller company, making $1 million plus per year, but he'd have a lot more exposure and most likely more pressure from that company's board. Or he could pivot into a general manager role and take on revenue and a P&L. Either way, he's got options, but he's also very aware of the trade-off of how much more stressful his life could become if he takes that next level jump. His role is not easy to replace. It could take months and months to find somebody who knows the organization like he does, the politics and the story of the products, among a litany of other things. Still, the machine wouldn't stop. There might be a slight hiccup here and there, but the company's going to figure it out. He's not that integral to the company's success that there would be a massive change because of him leaving. Regardless, when you have significant influence over the product marketing of a massive, massive tech company like James is, you're going to get paid a lot of money, and that's why he earns it. Last, we have Louis. Louis is 57 years old, and he's the chief executive officer of the same global software company that Angelo and James work at. This company has a market cap in the hundreds of billions. It, again, has 50,000 plus employees all over the world, and it has a stock price that analysts obsess over every single quarter. Last year, Louis made $50 million, but only a fraction of that came from salary. His base pay was $1 million a year. He then earned a $6 million bonus for hitting company performance goals. The rest, $43 million, came from stock awards that only pay out if the company continues to deliver at a high level. If the stock underperforms, he doesn't get it. But if the company crushes its targets, those shares can be worth even more. Over a long enough time horizon, his equity could be worth hundreds of millions of dollars. Lewis's compensation isn't unusual for his level. CEOs of similar sized companies like Salesforce, Adobe, ServiceNow regularly make between $40 and $60 million a year, with most of it, again, tied to long-term stock performance. These pay packages are reviewed and approved by the company's board, they're disclosed publicly in SEC filings, and honestly, they're closely tracked by investors and the media. So what does Lewis actually do? He steers the ship. He makes the biggest calls for the company, he manages the highest risk for the company, and he sets the direction for the entire business. Lewis is the one who decides where to expand globally, whether to acquire or shut down a business line, if layoffs are necessary, how the company speaks to Wall Street, when to make bets on AI, security, pricing, talent. It's a litany of decisions at the very top that he needs to make. He has an executive team of nearly a dozen that reports directly into him. These are people like the chief financial officer, the chief technology officer, general counsel, presidents of product and sales, and several other executive vice presidents. Every part of the company in some way rolls up to him. His fingerprints are on everything from long-term product roadmap decisions to how he's perceived publicly every time he speaks. A single sentence from Lewis on an earnings call can move the company stock by billions of dollars. A poorly timed quote in an interview can trigger a massive media storm. His public confidence, or lack of it, shapes how employees see him, how shareholders make decisions, and how competitors strategize. His day starts at 5 a.m. with a briefing. Internal escalations, competitor moves, overnight stock performance, a lot of high-level stuff. He may spend the morning on a board call. In the afternoon, he's got a meeting with his CFO to go over projections for next year. And in the evening, he's got a media roundtable because he needs to go out and storytell for the company. He works across time zones. He juggles strategy, reputation, execution. There's a lot of things on this guy's plate. And as such, Lewis carries more pressure than anyone else in the company. He's not really that close. When he screws up, thousands and thousands of employees pay the price, and potentially millions of shareholders as well. Every single bad quarter is on him. Every PR crisis becomes his face. Every exec who underperforms, every major company lawsuit, every investor concern, it all circles back to him. He is the final layer of accountability, and every 3 months, there's a global performance review on how good of a job he's doing when he announces the company's results and future outlook on earnings calls. His pay is enormous. There's literally no debating that, but the risk that he carries with every last decision that he has to make is also extraordinarily high. Most public software CEOs do not last more than 5 to 7 years. He has to deliver every single quarter, every single year, or the board will eventually start to look for someone to replace him. And when a CEO doesn't work out and the transition to the next one is rocky, it could tank morale for the company, and it could honestly set the company back for a generation. That's how high the stakes are. After taxes, his $8 million salary and bonus are taxed like ordinary income. His $43 million in stock is taxed as it vests. Again, depending on performance and the stock price, he could end up realizing $20 to $60 million in actual income in any given year. Lewis has a full-time financial team managing his investments. There's things like trust structures, equity diversification. He's a limited partner in a number of venture capital and private equity funds. He donates hundreds of thousands, sometimes millions, to philanthropic efforts that he cares about, and is consulted by government and business leaders on broader policy issues. Lewis's career started in consulting. He then pivoted to enterprise tech early in the 2000s and moved through a series of high-leverage roles. These are things like VP strategy, GM of international, COO, and then eventually, 8 years ago, he became the CEO. Since then, he's doubled the company's market cap, he's completed multi-billion-dollar acquisitions, and has transitioned the business into a global B2B staple. His next chapter could be becoming executive chairman. He could become the CEO of another company. He could, dedicate his life to charity. There's a lot of different things that this guy could do moving on. So is he overpaid? Lewis earns around 1,000 times what somebody like Angelo earns, and he's paid more than almost anybody on planet Earth. However, when a single decision from Lewis can affect billions in revenue, it can completely shift a market or set the course of the company for the next 5 years, you start to wonder, how much should someone with that much control over this large of a company be compensated? To the question of if it's fair, executive compensation divides people for a reason. Some people see the numbers and they flat out call it unacceptable. When one person earns $50 million while somebody else within the same company earns $50,000, the imbalance is insane. The argument doesn't necessarily require spreadsheets or market logic. It's a matter of principle. Nobody should accumulate that much wealth while somebody within the same company is struggling to cover basic needs. The scale for a lot of people is just way too extreme. The difference is way too wide. And then you have others that point to this is just how companies are structured. Compensation follows impact. People are paid based on how much their decisions affect revenue, costs, shareholder value. The more leverage that somebody has, the more that they can change the direction of the business with a single decision, the higher their compensation tends to be. A CEO who guides a multi-billion-dollar company is not being paid for the hours worked, but again, it's the impact and the decisions that they make. The model sounds clean on paper, but rarely is the credit actually distributed fairly. A lot of the breakthroughs, obviously, within a large company are collaborative. Major wins start from deep inside the organization. A new idea from a frontline employee, a product improvement that's flagged by a junior engineer, a customer insight from somebody from support. I mean, it can come from literally anywhere. These contributions tend to get absorbed into the machine, and then, the sort of results flow up and the rewards kind of get concentrated near the top. In my opinion, if a company is going to reward its top executives with sometimes tens of millions of dollars per year, then you just need to raise the floor. There should not be a single full-time employee that's financially unstable just because they don't earn enough money. Not one. A business that can afford to pay 8 figures to the CEO can probably afford to pay everybody in the company a healthy, livable wage. And if they can't do that financially, then how do you justify that wealth at the top? There's nothing wrong with big rewards at the top if everybody in the company is at least somewhat financially comfortable. The companies that understand this are rare, but they do exist. And honestly, they're setting the standard for what leadership should look like in this dynamic new economy that we find ourselves in.